Hello everyone, this is Neha Verma, Assistant Professor, School of Finance and Commerce, Calgoti as University. Today we will be discussing about the introductory part of the GST. Now these are the prerequisites that the students should have basic understanding about the indirect taxes and the basic business terminologies like what is a company, what is a sole proprietorship. These terms should be clear if the students want to have a clear understanding about this particular session. So let's start with the direct and indirect taxes. Firstly, a tax is a kind of a compulsory charge that is levied by the state in the common interest of everyone. There are two types of taxes: direct tax and indirect taxes. A direct tax is paid directly by an individual to the imposing entity. Whereas when we talk about the indirect taxes are imposed on goods or services, and the immediate liability to pay indirect taxes falls on the manufacturer or service provider or seller. However, the burden of indirect tax is uh, mostly on the consumers. In case of direct taxes, the burden cannot be shifted to someone else. In case of indirect taxes, the burden is shifted to the consumers. GST is a kind of indirect tax. Let's take a look at the different provisions of in the Constitution regarding the taxation. So, India has a three-tier federal structure comprising of the union government, the state government, and the local government. Firstly, Article 265 of the Indian Constitution states that no tax shall be levied or collected except by authority of law. In fact, it prohibits any kind of arbitrary collection of the taxes. Secondly, Article 246 of the Indian Constitution states that the authority to enact law and levy taxes and duties is given by the Constitution through Article 246, and the Parliament may make laws for the whole of India or any part of the territory of India. The state legislature may make laws for whole or part of the state. So the seventh schedule contains three lists which enumerates the matters under which the union and the state governments will have the authority to make laws. So firstly we have union list. In case of union list or list 1, the central government has the exclusive right to make laws in respect of any matter that is covered in the union list. For example, the defense of India, naval, mineral resources, these are, or RBI, these are some of the areas which are covered in the union list, and only the central government has got the exclusive right to make laws in such subjects. In case of state list, that is list number 2, it contains the matters in which the state government has the exclusive right to make laws. These matters, for example, public order, police, local government, these are some of the matters which are mentioned in state list, and the state government has the exclusive right to make laws in it. Next comes the concurrent list, which is list 3. So it contains the matters in respect of which both the central and the state government have powers to make laws. So this includes the criminal laws, criminal procedures, contracts, including partnership, agency, bankruptcy, and insolvency. So the taxes on income other than the agricultural income comes under the union list, and the parliament, the central government, has the right, exclusive right to make laws in respect of it. Now let us talk about the pre-GST tax structure in India. So under the previous indirect tax regime, both the center and the state levied and collected taxes on the goods and services separately. In respect of the goods, the center had powers to levy taxes on the manufacture of goods except for alcohol for human consumption, narcotics, etc. Whereas the state government had powers to levy taxes on the sale of goods. In respect of services, only the center had the power to levy and collect taxes. Hence, central excise, customs, and service taxes were the 3 main components of indirect taxes for the central government, while VAT and central sales tax, that is CST, were major taxes for the state government, along with octroi, entertainment tax, etc. Let's now come to VAT and CST, that is central sales tax. So VAT, which is value added tax, is a kind of an indirect tax that is levied at various stages of production, from manufacturing to warehousing to retailers and to finally consumers. At every stage of production, the tax, the VAT, is levied on the value additions. However, in case of sales CST, that is central sales tax, it is levied only on interstate sales. It is not levied at every stage of production, and it is not even levied on the sale of the goods if the goods are sold in the same state. Only when a manufacturer decides to take the goods to another state will the CST will be levied. Now, for instance, let's take a look at this particular example. X Limited has a production unit in Punjab, and they had to deliver goods to Z Limited, that is customer in Maharashtra. Now, what all taxes will be applicable here? Let's take a look at it. When we were in the pre-GST era, these were the taxes that were applicable. Okay. So firstly, the central excise will be levied by the center on the manufacture of goods. Then Punjab government would levy VAT or CST on the sale of goods. Then there was something called the entry tax on the goods entry to Maharashtra. And then there was octroi by BMC. Octroi was levied by some. Octroi is a kind of a duty that is levied by some countries on the entry of certain goods in a town or city. So octroi was collected by BMC. So these were a few taxes that were existing in the pre-GST era. The central excise was there on manufacturing. The VAT or CST existed on the sale of goods. CST was on the interstate sales, and VAT on every value addition at every stage of the production. And then there were entry taxes, there were octroi, there were other taxes as well. Many of these taxes were subsumed in the GST, and that's how GST is called a comprehensive tax that has subsumed a number of taxes in it. So France was the first country to implement GST in the year 1954, and within 62 years of its advent, about 160 countries across the world have adopted GST because this tax has the capacity to raise revenue in a very transparent manner and in a very natural manner. In India, the evolution of GST was can be rooted to the Kelkar Task Force in 2004, and from there it took almost a decade or more than a decade to implement this in India. Thank you. Now these are the relevant questions that are asked in the exam. Please take a look. And these are the references. Thank you so much.